planned for, and it's a position that is going to be emotionally controlled. So it's just a bad idea for me personally to keep those on, and there's just no reason for it. I've never had one work out. Even back in my early days when I would keep them on, I would inevitably wind up losing money. Okay, so let's talk about the patterns. This is something that's also very simple. And we're going to look at some charts, and I'll highlight some of the patterns and go over them, slowly, like I did, slower than I did in the course, and also talk about maybe some things that I may not have talked about in the course. I don't know, but we'll go over the patterns again here in just a few minutes. The first and most important thing is that the patterns should be easy to find. Okay, these aren't patterns that we should have to squint or wonder about or adjust. They should be something that virtually jumps out from the chart at us. The other thing to remember is, in order to have a line, I don't care if it's a line for support, a line for resistance, a line for a pennant or a flag, you have to make sure that you have two hits on that line. And what that literally means is that you've got two lows on the line, two highs on the line. In any case, you just have to make sure that your price contacts at least twice. And if you're in doubt, don't risk your hard-won money. Take it in a demo trade. Even if you're live trading, you have a demo account, you can still take the trade, or you can write it down on a piece of paper. This is the date, this was the price, this was the trade. And you can keep track of that trade later on, and then you can make adjustments in your own plan and understand that there are some patterns which you need to work on. How you need to work on your recognition, meaning how well you can find them. Others you may need to work on different areas as far as order entry. And again, we'll get into that. And remember that flags and pennants start with a big move in the market. In fact, one of the reasons why I love flags and pennants is not just because they're a reliable pattern, but they're also very easy to find. And again, I'm going to go through the different steps on what I look for and how I look for these patterns and how I see these patterns moving. And then the last point here is just watch the logical points. All of these elements work together to help you to identify the areas where you've got the best chance of seeing the likely direction of the market. Because remember, that's really what we're talking about here. We're talking about being able to trade in the likely direction of the market. Okay? We also look at the best times of the day to trade. In fact, this is one of the major components to the code that the market gives to us. But it's also one of the areas where traders just really, for some reason, turn their brains off and they don't really think about it. Because if you think about it, even in the stock market, you see some of the biggest volatility when? In the first hour of the day. In fact, even more than that, you'll find that the first hour of the day is divided up into 2 half-hour segments. And inevitably, if the market starts off trending very strongly, that trend will be reversed at about 10 o'clock in the morning. So you have the opening bell in the stock market at 9:30. Right about 10 o'clock, you'll see the market make a reversal. Of course, sometimes that reversal will go all the way back down to the open. Sometimes it'll reverse completely and start going down for the day. Sometimes it'll be somewhere in between, where it's just a small retracement and the market continues along its way. But then, of course, it's not 100%. Sometimes the market does blast through, but here's the reason why. It's because everybody's making their decisions. They've done their analysis from the night before. They come in and they're making their trading decisions right at the open of the day. They have their market or their orders ready to go at the open. That's just how most people trade. When they call up their broker before the open, they're giving them an order to buy or an order to sell prior to the open. You just have to remember that all markets are backed by people, and those people are creatures of habit just like you are. I don't care if you have somebody who, at a corporation who's in charge of buying and selling, billions of dollars in currency every year. That individual is a creature of habit. if he calls his broker every Wednesday at 9:46 a.m., he calls his trader at 9:46 a.m. every week. That's just how it's going to go. But that individual is more likely to give an order before the open, meaning 9 o'clock, than not. So we can look at the marketplace and start to narrow down